We have some breaking news this morning regarding Medical Properties Trust, stock ticker MPW, currently trading at $6.96 per share. The company just announced that they would be slashing their dividend to strengthen their balance sheet. Now, the big question is, how much did they slash this dividend? If we scroll down, we can see it includes almost cutting the dividend in half. We can see that the cash dividend will now be 15 cents per share every single quarter, compared to its previous dividend of 29 cents per share. After the dividend cut, we can see that they are targeting an initial payout of a projected near-term AFFO of less than 60% for the company. Management made it pretty clear that the reason behind doing this is to strengthen its balance sheet and reduce its cost of capital. So obviously, if you're a shareholder of MPW, that's not something you really want to see, but it does look like the market is positively reacting to this news. It's up slightly on the day, and I think part of the reason that it's up slightly on the day is because the market does agree with management. While a dividend cut is definitely not good for shareholders in the near future, nobody likes to see that, I think long term for this company it could be the right choice. Now, to dig into some of these stats, we can see over the past year they're down around 56.7%, year to date now down 39.25%, and in the past month alone down 31.43%, and we can see short interest very high, sitting at around 21.07%. To me, that's a pretty big concern. I don't like seeing that. Now, before the dividend cut, the dividend yield was sitting at 16.74%. Now it's going to be sitting just a little bit above 8.5%, and if we jump over to the dividend history, we can see they've actually done a decent job over the past decade of increasing their dividend payouts for a REIT, but with the most recent dividend cut, that next dividend payment will be coming in right here. So from a visualization standpoint, you can see it was a pretty significant dividend cut. But let's go ahead and jump into my REIT valuation spreadsheet to see if we can find the fair value of MPW and see how that dividend cut affects the valuation. So we'll be looking at a few different valuation models like always. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. But okay, let's go ahead and come up here and plug in MPW and hit enter, and you can see all of this data will automatically load in. Now we need to see what the updated dividend yield is, since this company did just cut their dividend. And since their quarterly dividend payouts will be 15 cents per share, that means the yearly dividend payouts will be 60 cents per share. So I'll plug in 0.60 right here and hit enter, and you can see their starting dividend yield is now sitting at 8.63%. Now this payout ratio is not something we really need to look at. We need to look at the guidance that management just gave us, and I've already mentioned this, but if we scroll down, we can see we can expect an AFFO payout ratio of less than 60%. So that is pretty good news. That gives the company a lot more capital to be able to use in different ways. But if we come down here, we can see analysts currently have a target price of $11 per share. Institutional ownership still at 84.1% and a beta of 0.98, so the volatility should be pretty close to that of the market. Now, the first valuation we will look at is the AFFO multiples valuation. You can see we're looking at comparable companies, looking at their price to AFFO multiple and taking the average. With an average price to AFFO of 12.68 and MPW's price to AFFO sitting at 7.63, it does look like the company is a little undervalued, because that gives us an intrinsic value of $11.56, which again was actually pretty close to what analysts had for their target price. So that is interesting, but I do think you do have to keep in mind a lot of people have concerns with two things. One of them was the potential for a dividend cut, which just happened. We still have a pretty high starting dividend yield though, but also short interest sitting at 21.07%. That is definitely high enough to scare off quite a bit of investors. Now, the next valuation model that I look at for REITs is the historical price to FFO valuation model. So I'll zoom out just a little bit, and basically what I do is I plug in the historical price per share over the past decade, and then I plug in the historical FFO per share so we can see our historical price to FFO over the past few years. And here's what's interesting. Average price to FFO over the last 10 years is sitting at 14.35, but currently right now, their price to FFO sitting closer to around 6.09. So according to where the company has traded at historically, it does look like the company is quite a bit undervalued. But again, just like I mentioned, you do have to keep in mind, I do think there are some other factors being priced into this stock. Now, the last valuation model we'll be looking at is the dividend discount model. And this is interesting because obviously we did just see the dividend cut, so we do need to see how this affects the valuation. But keep in mind the FFO payout ratio now less than 60%, so I do think this dividend is quite a bit more sustainable moving forward. So what I've done is I plugged in the quarterly dividend payout so we can see how much the company is paying out each year and see those year-over-year growth rates. We have 3.7%, 3.57%, a 0% growth rate, and then the most recent dividend cut right around 50%. Now moving forward, I do think the company will be able to grow at a pretty slow dividend rate of around 1%, and with a discount rate of around 8.5%, that gives us a dividend discount model price per share of $8.08, still a little bit above that current trading price. So when we jump over to our output tab, we can see the two valuations that we used, AFFO multiples at 11.57, dividend discount model at 8.08. And while the historical price to FFO doesn't show up on our output tab, we did decide the company was slightly undervalued. This gives us an intrinsic value of $9.83. So while the company's intrinsic value is currently a little bit higher than that current trading price, again, like I've mentioned, I do think there are other things we need to consider when looking at this stock. And obviously a dividend cut is almost something you never want to see from an investor standpoint, but in this scenario, it's probably good for the business long term. But with that being said, the company does still have some other problems, such as their tenants. You may have heard it said before that a REIT is only as good as the tenants that it holds. So if a REIT has bad tenants, it's probably unsustainable for the company to continue to increase its dividend payouts year over year, which is exactly what we saw with MPW. I definitely think this news and the story behind MPW is still developing, so we'll keep an eye on it as things move on. But go ahead and let me know in the comments down below what you think of the dividend cut and what you think of MPW stock. If you'd like to be able to download this spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.